Hello and a warm welcome to Tax Matters. Once again, Merry Christmas, and of course it is in order to wish everybody a prosperous 2021. On this episode of Tax Matters, we are going to be looking back on the year 2020. We call it 2020 in Review. What were those events that dominated the tax space in Nigeria in the year 2020, and which among them made headlines or made the front burner on your darling program? We'll begin with the inauguration of the newly constituted board of the FRS under the leadership of Mr. Muhammad Nami. As it was said then, and as you would hear presently, that was a landmark event, that board being the first board for the FRS in the last 8 years. That story came to you in our episode 3 of 2020. Precisely on Thursday, 16th January, the Honorable Federal Minister of Finance inaugurated the new FRS board.
Today is a landmark achievement because the first board of FRS was inaugurated on the 3rd of July 2008, and today is the second one.
Very historic.
I, Zainab Shamsuna Ahmed, Minister of Finance, Budget and National Planning, working under the directive of Mr. President, hereby inaugurate the board of the Federal Inland Revenue Service.
Chairman of the board, Executive Chairman FRS, Mr. Muhammad Nami, who by that day was only a month in office, seized the occasion to present the 4 cardinal pillars of his administration.
Our efforts to reposition the service for better service to our esteemed taxpayers will be anchored on 4 cardinal pillars. 1, rebuilding FRS institutional framework. 2, robust collaboration with stakeholders. 3, building a customer taxpayer-centric institution. 4, data-centric institution.
We move on to another earth-shaking event, the coming into effect of the Finance Act 2019, put in place to support the Appropriation Act 2020. Again, that was an event that took place for the first time in 2 decades. The story of the Finance Act 2019 was brought to you in several episodes, beginning again with episode 3 of 2020. Let's share with you the highlights of the Finance Act 2019 as we brought them to you, beginning with the Honorable Federal Minister of Finance, Budget and National Planning.
The Finance Act is to achieve incremental but necessary changes to our fiscal laws, principally by 1, promoting fiscal equity by mitigating instances of regressive taxation, 2, reforming domestic tax laws to align with global best practices, 3, introducing tax incentives for investments in infrastructure as well as our capital markets. 4, supporting micro, small, and medium-sized businesses in line with our ease of doing business reforms. And 5, raising revenues for government, particularly through the increase of the VAT rate from 5% to 7.5%. Our taxes are becoming more modern and strategic in approach. Indeed, the Finance Act 2019 exempts micro enterprises from corporate taxation and reduces the corporate tax rate for small and medium-sized businesses from 30% to 20%.
On episode 4, the X-ray on the Finance Act 2019 continued.
This Finance Act effectively has amended 7 different tax laws. It has introduced over 100 different changes, so it's significant. I'm particularly excited about the provisions for SMEs. I like the fact that there's a deliberate design in the Finance Act to enable these small businesses to reduce their tax burden and make them become successful. In addition to what I've mentioned, so small businesses, if your turnover in a year is less than 25 million, so arithmetically that comes to about 70,000 sales per day. You no longer need to register for VAT. You don't have to charge VAT on your goods and services. What that means is, as a small business owner, your goods and services become more affordable. More people will patronize you, and then you can grow quicker. Number two is, in terms of a corporate income tax, if your turnover is less than 25 million, your CIT rate is now 0% from 30% before. If you are a little bit bigger than that, we call you, based on the Finance Act, medium-sized company. That is, your turnover is more than 25 million, but it doesn't exceed 100 million. Your tax rate is now 20% instead of the 30% before. This is also an advantage for them. In addition to that, SMEs, in most cases, are expected to patronize, some of them, microfinance banks. So in this Finance Act, the services of microfinance bank, mortgage institution, and people's banks are now exempt from VAT. So you don't need to pay VAT on those services that they render to you.
And this on the taxation of online commerce.
So the most impactful amendment that Finance Act 2019 introduced is for foreign companies that are providing digital transaction and services to Nigerian customers. So for them now, the law requires that first, we need to decide whether their activity in Nigeria is sufficient to create what we call significant economic presence. And if that is the case, such a company will have to now pay company income tax in Nigeria. In addition to that, of course, on their services that they render, they will have to charge VAT, and when they don't, the Nigeria recipient of those services have to self-charge the VAT and pay it over to FRS. I guess it's government's way of trying to say, you know, this digital economy is big, and we have to get our share of that cake.
Still on Finance Act 2019, Mr. Yomi Olubenro was our guest on episode 9, 2020. Mr. Olubenro highlighted the protection provided in the VAT exemption list in the Finance Act 2019 to cushion the effect of the increase in the rate of VAT.
One of the extra measures that government took to make that pain a lot bearable is to expand the definition of basic food item, which is one of the item that is exempted from VAT. You know, so sometimes people don't realize that it is not all product and services that are liable to VAT. Yeah. We have list of exempted product, we have list of exempted services, medical product, educational product and services, basic food item. But the basic food item has always been one that, you know, generates a bit of controversy. All right, so it's water, basic food item because I get it directly from the tap, or when I package it in sachet, or I package it in bottle. All right, so it's bread basic when it is processed, it's yam basic when it is processed, you know, and all of that. So what this new Finance Act does is to expand and add to the list of basic food items so that the commonly eaten, you know, staple will not be liable to VAT. So that way, we're able to further cushion the impact. The pain will still be there, but it will be a lot more bearable.
On episode 5, the X-ray on the Finance Act 2019 continued. A breakfast seminar was held to sensitize stakeholders on the provisions of the Act. Mr. Albert Folorunshaw, managing partner of the hosting firm, took participants through the major provisions of the Finance Act 2019.
Let's start with the VAT, which has been in the forefront. Section 4 of the VAT, you know, has been amended to introduce a threshold, you know, for collection of VAT and registration for VAT. And it says that exemption of entities with annual turnover of below 25 million. So which means if your turnover is below 25 million, you are not expected to register for VAT. And of course, if you are not registered for VAT, it means you cannot charge VAT. And if you cannot charge VAT, if you incur any VAT in terms of if you buy anything from companies that are above 25 million, which means they will have charged you VAT, you are also not eligible to recover your input VAT. That is the implication of the threshold. If you look at the 25 million threshold, you know, it automatically increased the business cost. As because you cannot recover it from, there is no output value from which to recover it, which automatically, deepen the erosion of business profit, and of course increase, prices of goods, and of course the small and medium-sized companies who are not required to register may continue to charge. Those are questions people have asked. When do you know when a company has reached the threshold of 25? Assuming they continue to charge and not remit, saying that they are still within the threshold, how do you monitor them? Then Section 16 has to do with the cash base, which means going forward, you only pay VAT on what you have collected. Okay? A lot of us have always struggled as to how do I have to borrow money to pay VAT that I have not received. Okay? This Finance Act has clarified that. You pay VAT on what you have received, and if you are paying VAT on what you have received, this provision also says in Section 16 that the input VAT claimable is also on what you have paid. Okay, so that is likely to result in a situation where you have high input VAT, okay, and which the output VAT may not be able to cover. And so the provision says that you can automatically carry the balance of the input VAT forward, or you can claim a refund. And of course, Section 8 of the VAT Act also talk about registration for VAT and filing of VAT returns now to be on commencement of business. There has always been problem as to when do you start filing VAT returns, okay? And they keep on sending this penalty when you have not even started business, okay? So the provision has clarified that it is only when you commence business that you are eligible or you are required to file your VAT returns. And of course, if you fail to file for the first month, now you pay 50,000 naira, and then for each subsequent month, the failure continues, you pay 25,000. Imported services are subject to VAT fully, while exported services are not. All exports are now fully, particularly when it comes to services, all exported services are now fully exempted from VAT, provided there is a small provision there that says that if you exported a service on behalf of a non-resident entity to the PE or a fixed base of that non-resident entity within Nigeria, okay, so it is not a direct opposite of export now equal to, reciprocal to import. Okay, when it comes to export, that service must not be rendered in Nigeria to a PE or a fixed base of a foreign-related entity. Okay, if you do that, VAT may still apply.
Mr. Ogunje Milosi of the FRS was at that event and made these remarks.
The beauty of the philosophy behind the Finance Act is that it will be a reassure that we accompany the yearly appropriation act going forward. So any lapses observed now can be corrected, or any gap that exists can be also corrected. We can also move along with the international community in the area of taxation, administrations. Anything that is coming new, don't think that it will never happen in Nigeria. Before you know it, we are introducing it also. And also, let me also say that there will still be certainty in our tax law so that you can project and plan ahead of time. Though it's dynamic, I will make sure that it does not affect your business plans.
That promise has been kept as Finance Act 2020 to back Appropriation Act 2021 has now been passed.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
Thank you for staying with us. On this episode, we are looking back in time, highlighting those events that defined the world of taxation in the year 2020 and the way we brought them to you on Tax Matters. This is the first in the series, and in concluding this episode, we want to bring you how we told you the story of the response of the FRS to COVID-19. In a press release issued at the end of a meeting held on the 31st of March 2020, following the imposition of lockdown on the FCT, Lagos and Ogun states, the FRS, fully conscious of how the restriction of movement would affect the movement of taxpayers to and from tax offices, and fully committed to supporting taxpayers to thrive even as the service is faced with the pressure of generating increased tax revenue for the government, the Executive Chairman Malam Muhammad Nami has directed the provision of dedicated email addresses, one for every tax office, that taxpayers can use to submit documents or file returns rather than physically visiting the tax office. The email address of each tax office is available on the FRS website. The Executive Chairman FRS has also approved that taxpayers can pay now and file later while enjoying full waiver of late return penalty. With regards to remittance of VAT and withholding tax, which ordinarily are due on the 21st day of the month, approval has been given for this to be filed at the end of the month, a grace of 9 days. Still on the palliatives, taxpayers whose taxes are paid in foreign exchange have been given approval to pay in Naira at the prevailing I&E window rate on the day of payment. SOCO has also come for filers of payee returns with the External Affairs Ministry, non-resident individuals and armed forces and police personnel. Approval has been given for extension to 30th of June 2020. Finally, field audit, investigation and monitoring visits to taxpayer offices have been put on hold. There is good news coming out of Revenue House in Abuja, where the Executive Chairman Muhammad Nami has approved the extension of closing date for waiver of penalty and interest on tax debt to August 31st, 2020. The extension is a follow-up to a number of palliative measures devised by the FRS to cushion the effect of the COVID-19 pandemic on the tax-paying public. The extension also applies to tax audit, tax investigation and tax review assessments, as well as already approved installmental payment under VAT. The story of the palliatives continued in our episode 26 of 2020. Across the land, across the states, SOCO is coming the way of taxpayers. Majorly, the states collect personal income tax, which comprises of direct assessment for enterprise owners and payee for salaried employees. To cushion the effects of COVID-19, many states in the Federation have pushed out palliative measures. Common to all states, whose public notices we have in our possession are extension of deadline for filing of 2019 income tax returns by self-employed individuals and informal sector operators in almost all cases to September 30, 2020, as well as waiver of interest and penalties. The Ekiti State Internal Revenue Service on its own part has gone a step further to extend the palliatives to land matters. For example, the land use charge law rates slated to commence on July 1st have been suspended, while full amnesty has been granted to all landowners in respect of arrears of land use charge from 2017 to 2019. The Ekiti State Internal Revenue Service has also reduced by 50% the presumptive tax payable by marketmen and women and artisans. In the same vein, the Akwa Ibom State Internal Revenue Service has waived the payment of business premises levy for SMEs whose annual turnover is below 5 million naira. it has also waived the state economic development levy for SMEs whose turnover is below 5 million naira. Traders in all markets in Akwa Ibom have also been granted 25% discount on personal income tax for year 2020. Also in an unprecedented move, road levies including daily ticketing, stickers and emblems, as well as haulage fees, have been suspended all over Akwa Ibom State for year 2020. In the month of October, the End SARS campaign commenced, and of course, it also took its toll on businesses. Again, in a commendable show of empathy, the FRS responded. In its characteristic manner, the Federal Inland Revenue Service has identified with businesses that suffered losses in the aftermath of the End SARS protests. In a public notice under the hand of the Executive Chairman FRS dated 4th November 2020, the FRS states that as part of its ongoing initiatives of assistance to businesses at these difficult times, it is providing additional window of waiver of penalties and interest for businesses that pay up the principal portion of their outstanding tax liabilities in full before 31st December 2020. According to the statement, regardless of whether the outstanding tax liabilities arose from self-assessment or from government assessment, the waivers are in addition to extension of monthly withholding tax and value-added tax returns filing to month end, and the settlement of foreign exchange denominated tax liabilities in Naira at the prevailing I&E Forex window. In episode 43, we featured yet another public notice on palliatives. The management of the FRS has issued a public notice on the recovery of outstanding taxes from taxpayers. In the public notice, the service recorded that it had in the very recent past issued a series of palliatives for the waiver of penalties and interest on outstanding taxes arising from tax examination, audit exercises, investigations, or all other forms of tax assessment. The service has, however, observed that some taxpayers are yet to take advantage of the palliative window open to cushion the effects of the challenges of the economy on taxpayers. The public notice has consequently reiterated that the waiver of penalties and interest only exists up to 31st of December 2020. Therefore, all concerned taxpayers have been put on notice that after the expiration of the palliative window on the 31st of December 2020, the service shall take steps to recover all outstanding debts with accrued penalties and interest. We record that in the wake of the lockdown imposed by the COVID-19 pandemic, the FRS magnanimously extended the 30th day of June deadline for company income tax filers with accounting year of January to December to August 31st with full waiver of penalties and interest. We recall also that the FRS allowed filers of VAT and withholding tax returns statutorily due on the 21st day of the month to the 30th day, again without penalties and interest. As the end of August drew near, the FRS again in a surprise move extended the palliatives to 31st of December 2020. Again, as a further show of empathy with business owners, on November 4, 2020, the FRS issued a fresh set of palliatives to alleviate the pains of business owners who suffered disruptions in the wake of the End SARS protests. One major aspect of the palliatives running through the different exercises is a palliative for taxpayers who are facing challenges in sourcing for Forex to offset their foreign currency denominated tax liabilities. The FRS magnanimously gave them the option of paying in Naira at the prevailing investors and exporters Forex window rate on the day of payment. We do think that the FRS deserves to be commended, and in the spirit of one good turn deserving another, concerned taxpayers should do the needful before the deadline. There you are, the star episodes of Tax Matters in year 2020. Next episode, we will bring you part 2 of the series, 2020 in Review. Thank you for watching. Have a blessed year 2021.